My great honor today to introduce CA Jatin Christopher, who is here to deliberate before us on a very, very interesting and relevant topic, which is interplay of GST with other laws. If we study any law, or if we practice in any law, it is literally impossible to basically practice in just one particular law without having a working knowledge of the other laws which are prevalent in our country, especially related to taxation. So just last week, Jatin sir, not last week, I would say last month, 3-4 weeks ago, we were having a discussion in Bengal Chamber of Commerce, and one very relevant question came up in relation to IBC, wherein a company had gone into bankruptcy and the company had actually paid the taxes and before going into liquidation or before going into the liquidation proceedings. However, the party to whom the company had supplied could not take the credit because the company was not able to file their GST returns before going into liquidation. So now this customer of the company wanted to know whether we are eligible for the input tax credit under GST or not. So a law cannot be studied alone or solo. We need a fair bit of knowledge of other laws to know or to be able to justify our knowledge in a particular legal field. So keeping that in mind, we have an extremely knowledgeable person with us, CA Jatin Christopher, who has kindly agreed to give his time to discuss the interplay of GST with other laws. And with that in mind, we start today's session. We wanted to have this session face-to-face in the DTPA conference hall, but considering the fact that we have a huge rally and transportation to the conference hall physically would have been a problem, we have shifted this entire session online. Jo Jatin sir is in Calcutta, but unfortunately we will have to have this session online considering the traffic situation today. Before we begin, I would like to introduce Jatin sir. CA Jatin Christopher is a chartered accountant, cost accountant, and law graduate. He qualified as a chartered accountant in 1996 and has been in practice since 2000, specializing in indirect tax advisory and litigation matters in both central and state tax legislations. He is a resource person for ICAI and government in the areas of customs, foreign trade policy, and GST. His views and contributions are well published in several respected fora. He practices in a full-service firm based in Bangalore. Jatin sir, we are very, very honored and actually fortunate to have you with us today to deliberate on a very interesting and relevant topic. Without wasting much time, I would like to invite Jatin sir to give his views on today's topic. We will, Jatin sir has kindly accepted to deliberate till 6 o'clock, after which we will throw the floor open for question and answers. Meanwhile, I would request everyone to keep their videos on, but keep themselves on mute. You may put your questions on the chat box, and sir would be kind enough to take them up after 6 o'clock once his deliberation is over. Over to you, sir.
Thank you, madam, for that kind introduction, and I'm very grateful to DTPA for giving me this opportunity. I'm very happy that DTPA has identified this topic. It clearly shows that professionals in Calcutta are, or members of DTPA are very on top of things as far as what are the relevant topics to consider as we read GST, and for having given me this opportunity to share some thoughts about the interplay of GST with allied laws. I'm truly grateful. Other income appearing in the financial statements, does it mean it is taxable turnover of the entity whose financials carries this information. Let's pause and consider this statement. Assessee has prepared a financial statement, and the financial statement carries a disclosure entitled other income. Does it ipsi dixit mean that this is representing turnover liable to tax under GST? While the department believes that it is, and for that reason, they issue notices by making a linear comparison of books versus 3B and demand 18% tax, there could be nothing farther from the truth contained in the law for several reasons, some of which we will discuss today. When we look at supply, I'm very grateful to DTPA because this topic is perhaps I'm sharing for the first time that I've been considering can become very significant in GST litigation once the tribunal is operational. If you look at the definition of supply in section 7.1, we read that it says supply includes all forms of supply such as sale, transfer, barter, exchange, license, rental, lease, disposal made by a person for a consideration in the course or furtherance of business. So friends, if you look at the 8 forms of supply, 2 things become very clear. One, you cannot expand the 9th, 10th, 11th forms of supply into this definition. It is 8 and 8 alone, which will be a supply in GST. For example, transmission. Members are aware of what is transmission. Transmission is not transfer. So if there is a transmission that results in vesting of property in another person, it is not a supply, although title has passed. There is a inventory which has been mortgaged and the borrower has defaulted such that the lender now secures title to the mortgaged inventory. This is also not a supply because there are very finite forms of supply, and when legislature uses these expressions, we cannot assume that these expressions are used ill-advisedly by the legislature. And the proof of this is the second Gannon-Dunkerley judgment, where the apex court said in 88 STC, when the word sale is used in a legislation, it has to be understood in which, in the meaning given to this expression in the substantive law on that topic. Substantive law on the topic is Sale of Goods Act 1930. So therefore, sale for sales tax could not have its own definition of sale, except that it had to go to Sale of Goods Act and borrow the definition from that legislation. And that led, as you know, to the 46th Amendment to the Constitution. Now, when sale is used in 7.1a, can the meaning of the word sale be anything other than that defined in the 1930 law? Therefore, can transfer be anything other than that defined in section 5 of the 1882 law? What is barter? What is exchange? Barter is not defined in Transfer of Property Act. Exchange is defined. What is license? What is lease? What is rental? What is disposal? Friends, there may be passing of title from one person to another, but every passing of title is not supply. Passing of title in any one of the 8 forms only will be supply. And if we expand the scope of supply, then we would have done great injustice. We would have done great injustice to what the legislature wants to do. After all, legislation is the will of legislature. Taxpayer and executive are supposed to only act, interpret and understand and comply with the legislative will. So if the legislature wanted to include transmission, then they should have said so. If we say that it is an oversight, then we are insulting the legislature's wisdom. So let's pause and consider that no taxpayer or a tax officer can claim to have any greater wisdom than the legislature. And if the legislature believes that they have made a mistake in drafting, we have seen in the last 6 years, 6 retrospective amendments. So here is a legislature which is greatly open to correction and humble enough to bring it into effect retrospectively even. Now, if we say that we'll extend the scope of supply into the 9th, 10th and 11th forms of supply, which is now not permitted, then what is the purpose of the words such as appearing in section 7(1)(a)? I owe that answer also. To use adjustum generis, we have to understand, we've seen these decisions in the context of Article 12 of the Constitution, where it says you cannot use adjustum generis very lightly. Shantabai versus State of Bombay is one judgment. The decision of Ajay Khastia versus Khalid Mujib. These judgments have brought out the principle that you cannot use the interpretative rule of adjustum generis very lightly. The legislature must give us a clue that adjustum generis must be used. How do we get this clue? Statutory construction principles, which are discussed in the book published by Justice G.P. Singh, presents this in a very elegant manner to say generic words must be preceded by specific words. There must be generic words, dogs, cats, and other pets. Other pets will be generic words. Specific words are the ones that precede. First, we must find that there are generic words. Second, we must find that in those specific words, there is a common genus of which each of them are a species. Dogs, domesticated mammalian animals. Cats, domesticated mammalian animals. That could be the common genus. So maybe we cannot fit a parrot into it if we restrict it to mammals. But if we say domesticated animals, then maybe parrot also can find a place there in other pets. So what is the purpose of such as? Because adjustum generis clearly cannot be used in 7(1)(a) because there are no generic words after disposal. Then what is the purpose of such as? Such as has to be a subset of each of this: sale, resale, works contractor, subcontractor, lease, sublease, license, sublicense. Anything that is a subset of one of the 8 forms only can be accommodated within these 8 forms of supply. The reason why this 10-15 minutes of background is necessary is for us to now accept that GST is standing tall because it stands on the shoulders of giants like Contract Law of 1872, Transfer of Property Act of 1882, Sale of Goods Act of 1930, so on and so forth. So it is inescapable, and my compliments to DTPA for recognizing the importance of allied laws to illuminate our understanding of GST law. We are greatly blessed with common sense and capacity to think logically. These are the 2 enemies of construction of statute. We should neither look at it with eyes of common sense, nor should we look at it logically, because neither is consistent nor reliable. We have to go to the substantive law, and this has been held in the second Gann and Dunkerley with good reason. I mean, we have to go back and study second Gann and Dunkerley to understand why did they not allow, let's say, A.V. Mayappan's case, where what happened? Film was produced in Hindi. Somebody purchased film rights to produce that film in Tamil. The person said, I will rent these rights for production of the same film in Tamil language, sales tax department wanted to levy sales tax on the consideration paid. But the assessee must have been a young professional like any of the members here, who said at that time, since I have an obligation to return it back after the term, this is not a sale, because sale is permanent transfer. Therefore, it is not liable to tax. And the conviction of the sales tax department at that time was, look at the substance of the transaction. The substance is where the economic benefits of this right are exploited and enjoyed by the transferee. Therefore, in substance, it is a sale, although in form, it is a rental contract. All these judgments finally reached the grave and were given quietus, because no less than a constitution amendment was needed to fasten liability on lease transactions. If you compare this Evi Mayappan with Rashtriya Ispat, what happened there was in Andhra Pradesh, a contractor was allowed to use construction equipment belonging to the customer, Rashtriya Ispat, some excavators, trucks, etc. And based on the terms of their contract, the price agreed was reduced to a certain extent, and the sales tax department came forward and said the negative variation is nothing but lease rental of the construction equipment. And AP High Court said in Rashtriya Ispat, for the right to be transferred, the transferee must be free to use those equipment in that site or in any other site. And the restriction was that you can use our construction equipment, but for our project only, you cannot take it anywhere. So when the right is transferred with restrictions, then it is not a transfer. So therefore, what AP High Court held went on to get upheld in Supreme Court, that transfer, to be a transfer, should be absolute and not restricted. Friends, each of these expressions therefore have ingredients. If we look at the substance of the transaction, then we will mislead ourselves into thinking that this is a supply. But if we look at in matters of private legislation, let's say in a contract, or in a tax, in a contract, there are two private parties who come together to enter into a transaction. Similarly, in taxation, two private parties, one is a state, another is a taxpayer, they come together to enter into a transaction. Contrast private legislations with welfare legislation. I'll give a very quick comparison to highlight the difference between welfare legislations and private legislations. Government of West Bengal will be treated as the principal employer if the subcontractor does not pay wages to its workers. After all, in a welfare legislation where Payment of Wages Act, Payment of Bonus Act, Minimum Wages Act, Code of Wages, in labor welfare legislations, it is a welfare legislation, so the liability is vicarious. Who has employed the workman is answerable for workman's compensation. But does it mean that Government of West Bengal, who is treated as the principal employer, is liable to do 192 TDS on salaries and wages paid to workmen? Answer is no, because income tax is a private matters legislation. It is private to the subcontractor and the union. So whenever we read a legislation, we first need to split this, identify whether the legislation is a private matters legislation or a welfare matters legislation. And if it is a welfare matters legislation, we have to apply purposive construction, substance over form. And when it is not a welfare matters legislation, we cannot use purposive construction. We have to use strict construction. And when we use strict construction, it will be form over substance. A court is required to enforce the terms of a contract. A court cannot substitute its wisdom to that of the parties. The court cannot say, what a onerous contract you have entered into, what imprudent terms you have agreed. Therefore, this contract we will not enforce, we will alter the contract and impose something else. If that were to be true, then every month we will go to the GST department and ask the officer how much tax I have to pay every month. I will pay that tax and come back. Forget supply, forget ITC, forget 3B, 2A, 2B, forget everything. Let's take this book and leave it aside. And if that is not the legislative will, now we need to understand what is legislative will. If financial statements contain other income, there is no basis to say that that other income has arisen out of a transaction of supply and it has escaped payment of tax. There is no such adverse assumption cannot be made. Adverse assumption cannot be made that if you don't give explanation, then it means you are guilty. Although tax officers will take another 25 years to understand that that is not the case. If you keep quiet, you have done your client as a taxpayer. If you keep quiet, you will have done your case far greater good than if you open your mouth and offer to justify your self-assessment. Let me also give you an indication that what is the reliability of books of accounts. I'm coming to allied laws. I need to make certain foundation straight so that when we start getting into the allied laws, we will have a conviction with which we will read these legislations. Financial books of accounts are an unreliable source of evidence. This has been stated in section 34 of Indian Evidence Act. Finished. Chartered accountants will be heartbroken to know that books of accounts are an unreliable source of evidence unless there is corroboration. Next, financial statements are prepared for purposes of financial reporting. I'll give a small example. Lease assets given on lease. The lessor will account the assets at historical cost. The lessee will account the leased assets at NPV of future cash payments. Now you look at this baffling situation that Ind AS 116 has created. The same asset is recorded as asset in two parties' books. You understand? So therefore, let's not attempt to reconcile books with GST returns because it cannot be reconciled. It cannot be reconciled. And if we open up accrual versus time of supply, then the reconciliation will become even less likely. So therefore, we may, if the supposed evidence that is being used, that is the financial statements, are so fatally unreliable, what is the point of trying to explain what is in the financial statements? First of all, books of accounts are not reliable without corroboration. When it is not reliable, why are we trying to even explain and reconcile the data appearing in these two things? Having said this, now we have to look at why transactions are treated in a particular manner. I'll give you a few pointers from GST law. Tax leviable under 9(1) has to be discharged under 9(3). 9(3) itself does not create a levy. 22 requires supplier to register only above threshold. So whenever we read 9(1), we have to read with 11(1) also. We cannot read 9(1) in isolation. So therefore, somebody cannot be fastened with a liability to discharge tax under 9(3) simply because there is a purchase from of services or goods which are listed in 4/17 or 13/17. All right, if 4 and 13 contain certain things, it only arouses suspicion that probably RCM is payable. Little more investigation is required to establish whether at all 9-1 read with 11-1 has attracted. If 9-1 less 11-1 is equal to 0, 9-3 is equal to 0. So please look at it from that point of view. Today, investigations are being conducted in such a impoverished manner that department is relying on taxpayers' fear to support their allegation. Taxpayers' foolishness and fear, both are a very dangerous combination that is boosting revenue. Please be very vigilant. To establish that there is a liability, we'll need to know the ingredients. Second, when you look at 77 of CGST law and 19 of IGST law, liability cannot routinely demanded under CGST, SGST if that liability exists but under IGST law, and vice versa. Payment of wrong tax is not acceptable. You have to pay the right tax once again and collect refund of the wrong tax. So 77 and 19 are a very good indicator in GST law. This is called, in GP Singh calls this internal validation. To prove something is something or that something is not something else, look within the legislation, look within the notification if you have any ingredients to support this position. Now, when we look at 7.1 very clearly, all the 8 forms of supply are one or the other form of a contract. Sale, as you know, prior to 1930, Sale of Goods Act, the provisions of Sale of Goods Act were residing in Indian Contract Act of 1872 between section 74 to 123, 75 to 123. It was taken out of contract law and placed in a separate legislation in 1930. So therefore, Sale of Goods Act also goes back to 1872, 145 years before GST. So therefore, all forms of supply are one or the other form of contract. And we'll go into contract law in a moment, but let's look at 7.1c. 7.1c takes us to Schedule 1. Schedule 1 says the following transactions will be a supply. The law does not use the word deemed. Deemed can give a meaning not otherwise available to an expression. For example, section 231 of income tax law defines person and says person includes firm. If you go to Partnership Act 1932 in section 4, a firm is not a person. A firm is merely a collective noun of the partners. So when the word deemed is used to specify the obvious as well as cover the non-obvious. But in 7.1c, since this expression does not appear, we have to read Schedule 1 very carefully. 4 types of transactions only are covered by 7.1c. Secondly, even if there is no consideration, it is a supply, is a good indicator that other than these 4 transactions, consideration is mandatory for it to be a supply. So under 7.1a, consideration is a must. And under 7.1c, existence of consideration is welcome, but absence of consideration is not a bar. So 7.1c feeds the missing ingredients. 7.1c feeds the missing ingredients. Which is the missing ingredient? Consideration. Which means other than consideration, if any other ingredient of a valid contract are missing, can it be fulfilled by 7.1c? Answer is a emphatic no, because only one of the several ingredients. What are the ingredients for a valid contract? Section 10 of contract law says following ingredients. In the following situation, don't exist, then it will be a void contract. So when you go to Schedule 1, all the ingredients in section 10 of contract law are not fed by Schedule 1. All the ingredients must exist. Only one ingredient of consideration, if it is missing, then only it will be fulfilled by the Schedule 1. So therefore, first of all, it is only 4 transactions covered by the fiction in Schedule 1. And out of those 4 transactions, all other ingredients should exist, barring consideration. And if consideration is also existing, then Schedule 1 will anyway be not necessary, because 7(1)(a) itself will cover these transactions. If you look at the 4 ingredients, we'll find, let's take an example of para 1, Schedule 1, permanent transfer of business assets, on which input tax credit has been availed. Business assets includes fixed assets, inventory. It includes assets which have been depreciated 100%, but still in the use and possession by the assessee. Then why consideration is not, when there is a permanent transfer, why there cannot be consideration? There will be consideration. There will be consideration. Para 2, if you identify, we'll find related parties. When just because related parties are transacting, does it mean we will not transfer anything to them for consideration? Of course, we will transfer for consideration only. I'm trying not to touch upon Circular 199 because it will open up a separate discussion altogether. When related persons are transacting, there will be consideration, because existence of relationship is not an exception in Section 10 of contract law. But when distinct persons are transacting, there cannot be consideration, because I cannot contract with myself. Therefore, the missing ingredient of consideration is furnished by Schedule 1, but all other ingredients must exist. 2 parties, 2 distinct persons, object of contract, lawful object, consideration is not required. So when you look at it from this point of view, please understand the limited extent of fiction furnished by Schedule 1. Para 3, principal gives material to agent to go and sell it. When the agent sells the goods, the receivables belongs to principal. Principal appoints agent to purchase goods from various vendors. When agent purchases material from suppliers, the liability towards the supplier belongs to the principal and not the agent. But the fiction in Schedule 1 says that inter se principal and agent, it will be treated as a sale of goods. And of course, import of services under para number 4. So friends, when we look at GST law, it is unmistakable that GST law deeply depends on allied laws. And therefore, we need to understand what are the allied laws. Given the limited amount of time that we have, we will take a few legislations to touch upon it to understand the interplay. We'll go in a reverse order. So that we have live examples to consider, and then go into finding out what are the areas where common mistakes are committed. Gift. 1758 talks about gift. When a company gives gift to its employees, ITC is to be recovered. Now, what is gift? Section 122 Transfer of Property Act 1882 says voluntary contribution. It's without a consideration. Somebody promised to give me a gift and defaulted. Can I enforce this arrangement? 122 says an executed gift is enforceable. Otherwise, it is not enforced. So therefore, friends, please be vigilant. Let us not use words whose meanings are very significant, but we have not intended to extend the same significance when we are using it. Yesterday, there was a meeting with a client. It was so unbearable. I will share with you why. The client was describing his business. And he said he is a developer. Then he said somebody else is a joint venture partner. Then he said somebody is a buyer. So I told him, please don't use these words because I don't know if you know the meaning of these words. When you use these words, you are misleading us into thinking that you understand the meaning of these words. पेशेंट को चाहिए कि बस तकलीफ सुनाए, बीमारी का नाम डॉक्टर साहब बताएंगे. Patient goes to doctor and says, doctor, I'm having sinus. No, you don't have sinus. You are having headache and you have running nose. Whether it is sinus or not, doctor will tell you. So we had to pause the client and tell him, don't use these words as if to contaminate our thinking. We will still think of you as A and B, and you're describing the transaction. We will decide whether you are a builder or a developer or a landowner or a customer or a joint venture partner. All those things you cannot say. But the sad part is, historically, we have allowed clients to educate us. Tell me the facts. Clients cannot give us the facts. Clients can only give us information. We have to distill that information and derive the facts for ourselves. What does the client know? If client knows that he is a developer, then obviously he must be expert in transfer of property law, contract law. He does not know these things. I'll give an example why this is important. There was a king. I like this judgment, 5 pages. 300-page judgments are all not written in the past. Nowadays only it is trending to write hundreds of pages of judgments with nothing in them. I'm very sorry to say. 5 pages, simple judgment. There was a king. He had a lake. During annexation of independent kingdoms to the Republic of India, the Republic of India said, Mr. King, Raja of Parikud, Mr. King, you please give your lake, Lake Chilka. Lake Chilka was the lake. Republic said, you give the lake to me. It belongs to the Republic now. So the king said, oh, I'm so sorry. Just recently I entered into lease agreement with the queen. So the lake does not belong to the king till the term of the lease gets over, and you cannot go and ask the queen because it is her private property. Shatranj, Republic ke saath. Chalo, wait. So the matter went to Supreme Court. Supreme Court said, let us find out what is this lease agreement the king has entered into with the queen. The question raised was, is this lease agreement for the purpose of the fish in the lake? Then it is for chattel. So therefore it is a sale of goods. If it is a sale of goods contract, then the Republic has not given its consent to this contract. So the Republic is free to terminate the contract. Thank you very much. Lake now belongs to the Republic. No. It is not for the fish. It is for the entire lake. The water, the fish eggs, everything. So then the court said, please show us this lease agreement. Is it registered? Section 17 of Registration Act 1908 says, where any interest in an immovable property exceeding 100 rupees is sought to be created, it has to be by an instrument in writing duly registered. They said it is not registered, so it can, even if it is for immovable property, it is void. So therefore, Mr. King, kindly leave the lake and you proceed to your living quarters. You understand? Later we will stop giving you privy purses also. That's a different matter. So friends, please bear in mind, we have this Ananda Bihari State of Orissa, very brilliant judgment. Thought 5 pages, brought out the principle. Till today it is holding fort. So I met one builder. I don't meet only builders, but coming from Bangalore, if I say IT company, it will look boring. So I met this builder. This builder said, sir, I have a joint venture agreement, joint development agreement. So he was discussing the terms of the joint development agreement. I asked for an agreement. He said, sir, we are paying 5% tax without ITC. I took the agreement and I said, sir, you have to pay 18% tax, but you have ITC. Kya baat kar rahe ho? Yes, this joint development agreement is not registered. As per Supreme Court, an agreement that is not registered is void. If you delete this agreement and see, you are nothing but a contractor who is going to get paid in kind. Contractor pay entry number 9954, serial number 3, Roman number 12, 18% tax. So therefore, please bear in mind, friends, please don't permit the clients to furnish the facts. Clients need to furnish information. Consultant needs to distill that information and derive the facts and then give the opinion. The reason why this is necessary is GST, whether you like it or not, is deeply invested in allied laws. You cannot simply ignore allied laws and interpret GST law. Commission paid to director, department says attracts RCM. Commission subject to TDS under 192. Baat khatam. What is there to debate any further? Because assessee cannot go and take one factual stand before income tax authority and come back and take a different factual stand before GST authority. Just because the name of the payment is commission does not become commission unless it is in the nature of commission for their services. Salary paid to partner does not attract TDS under 192. Even though you call it salary, it is appropriation of profits. It is not salary. There is no master-servant relationship between the firm and the partner. So therefore, those who go by common expressions used to describe various transactions are bound to be disappointed because the common expressions are not legally accurate expressions. Are legally not accurate expressions. So when you look at these allied laws, the purpose of the allied laws is assertions made before other regulators without a GST motivation have high probative value. When you go to income tax and say, I have deducted TDS under 192 and provided you have correctly deducted TDS, you cannot come and deny that fact to regulator here. So therefore, coming back to gift, what you are calling gift is invariably not gift. There's a long explanation for it. I won't go into it because there are other interesting aspects to discuss. If you say something is a gift, it should be claimed under chapter 6A and not section 37 in income tax law. Full stop. If you're claiming it as a business deduction, you're not claiming it under chapter 6A, it cannot be a gift. After all, 1758 says, goods lost, stolen, destroyed, written off, or disposed of by way of gift or free sample. Gift or free sample dispose karne ke matra do tarike hain. And what is fit for sale will never be disposed. What is therefore unfit for sale only will be disposed. Old newspaper will be disposed. Brand new inventory will be sold, not disposed. And since sale and disposal are sitting at the two ends of the 8 forms of supply, they are not interchangeable. If they are interchangeable, then we will try to interchange between sale, transfer, barter, exchange, license, register, disposal. We cannot interchange. All of them may overlap, but all of them are independent. They are there for a particular reason. Each one has their own meaning. Each one have their own purpose of existence, and each one have their own deep understanding of these provisions. I'll come to contract law, but let's look at transfer. If you look at section 5 of Transfer of Property Act 1882, it talks about transfer in present or in future. Transfer of property in present or in future. Now, if you see transfer of property in present or in future, does it mean I can transfer in present of property in future? The property that is yet to come into existence, can I transfer today? A property that is not in existence, can I transfer today? Now we will go to Sale of Goods Act 1930 and then come back to Transfer of Property Act. Section 4.3 of Sale of Goods Act and 6.3 of Sale of Goods Act says, contract in present for goods in future is merely a promise in present to contract in future. I will repeat. A contract in present for goods in future is not a contract at all in present. It is merely a promise in present to enter into a contract in future on these terms. So therefore, when a document is entitled contract, please don't assume it's a contract. Now we'll take another example that is relevant in GST. When you have a contract, the object of the contract must exist. Otherwise, how could you have entered into negotiations about a contract not in existence? You understand? When a contract is being negotiated, what is it that I am selling? What is it that you are buying? It must be in existence. Otherwise, you are simply doing imagination. CA final pass हो जाने के बाद मैं practice शुरू करूंगा job. That is not a contract. That is only dreaming. After final only real contract, isn't it? So therefore, look at 6.3 and 4.3 of Sale of Goods Act. There is no contract in present. It is only a promise in present to contract in future. Even in the, whether in the case of future goods or goods may exist, but it may not be earmarked. That is called unascertained goods. I have 1,000 camels. I agree to sell one camel. Which is your camel in this 1,000? You don't know. So it cannot be ascertained goods. It is unascertained goods. You should say, any one of the 1,000 camel you give me, then I will give you one camel with all the diseases. Because you have only agreed. Caveat emptor. So when you look at it from that point of view, contract in present requires object to also be existing in present. Now we will take this example of transfer of property in present or future. In Jugal Kishore's judgment, Bombay High Court said, transfer of property, in present or future does not qualify property, but qualifies transfer. Future property you can transfer in future. Present property you can transfer in present. That's all. So that is why we have agreement to sell in present, but sale deed in future. When you enter into an agreement to buy an apartment or a villa or a plot, what you are entering into is not a sale deed. You are entering into an agreement in present, but it will become a sale deed. Title is transferred only on sale deed, not on agreement to sell. Now we will look at section 54. Beautiful section 54 of transfer of property law. It says, transfer of property law section 54 says, agreement holder have no interest in the property. Agreement holders have no interest in the property. But many times you will find before OC, customers are transferring that agreement to various buyers. Buyer 1 entered into agreement, booking agreement and agreement to sell, construction agreement with the builder. Before OC, he wants to sell for higher price. Let us say he is entered into an agreement for 1 crore to buy an apartment. Before OC, he is willing to sell it for 1.5 crores. And he says 50 lakhs is the consideration for assignment. Friends, please bear in mind, we have to understand certain fundamental aspects. Turnover and profit are two different things. Now you see, this apartment costs 1 crore. I have paid 1 crore. What is the right I have? If section 54 says I have no interest in the property, then when I transfer this to the new buyer, am I transferring the property or I am transferring the right to secure a sale deed? I have to be transferring only the right to secure a sale deed. To explain this, I have to give one more example. I have purchased a movie ticket, cinema ticket. I give it to Abhishek to go and watch. What have I done here? I have paid money. I have paid money to PVR. So now they have to exhibit the film when I go there at the appointed time. So as far as I am concerned, it is an executed contract because I have performed my obligation. As far as PVR is concerned, it is an executory contract. They have not yet performed their obligation. In an executed contract, the right I have is nothing but to enjoy the benefits. I have performed my contract. Now I have to enjoy the benefits. To enjoy the benefits, I can ask Abhishek to go and enjoy it. This is called assignment. Assignment always takes place in an executed contract and not in an executory contract. PVR cinema cannot tell, no, we will not show the film in PVR. You go to Cinepolis and watch the film. That is not permitted. Because as far as PVR is concerned, they are failed in their obligation. So friends, please be very vigilant when the transfer by agreement holder is being made. He is not transferring for a profit. He is not transferring for a consideration of 50 lakhs. He is transferring the enjoyment for a total value of 1.5 crores. The reason why he wants 50 lakhs is first to cover his cost and then collect a premium. 50 lakhs is the premium, but premium is not turnover in GST. Entire 1.5 lakhs is an agreement to permit somebody to enjoy the benefits out of an executed contract. So therefore, it is obviously liable to GST at 18% at 1.5 crores, not only on 50 lakhs or anything lesser. Therefore, there is no questioning. So friends, when you look at it from this point of view, we have to be very vigilant. What we have said in the contract, we should act according to it. The contract and the conduct cannot be in conflict. The contract and conduct cannot be in conflict. If conduct conflicts with contract and conduct has an advantageous tax consequence, then the tax as per contract will be demanded and not as per conduct. There was a doctor who got a ASMT 14 notice under 63 stating that he has failed to register. They have taken some TDS data and they have given him a ASMT 14 best judgment assessment notice stating you have failed to register and discharge tax. So the doctor went to his chartered accountant and said, I am a doctor, so I am exempt from GST. So the chartered accountant said, yes, you are exempt from GST, but why is the department issuing you this notice? It turns out that from his TDS statements, the doctor is getting rental income from commercial property. The doctor thinks doctors are exempt from GST. The doctor does not see the difference between doctor being exempt from GST and healthcare service provided by a doctor being exempt from GST. He assumes that a doctor does not do anything other than providing healthcare services. Nowadays, a lot of doctors have gone into real estate business. So therefore, friends, please be very vigilant. When you look at facts, you have to establish that they are not assumptions, but they are facts. And when you go to allied laws, you will find proof there that that is not the fact. And the assumption made by the taxpayer is only a misunderstanding of law. An agreement holder transferring for a premium of 50 lakhs thinks that he has to pay GST only on 50 lakhs. He is fatally misunderstood the provisions. He is liable to tax on 150 lakhs. Now, when you look at another transaction, can the developer in a joint development agreement buy back 50% of the apartments falling to the landowner's share? Can a developer buy back 50% of the apartments falling to the developer's landowner's share? It has to be very clearly understood that without altering the joint development agreement, altering the incidental terms arising from a sharing agreement or something related cannot be having the effect of altering the joint development agreement. So friends, please be extremely careful how these transactions are being put through. I'll give you another example. A and B entered into joint development agreement. for construction of commercial property for sale. A and B entered into joint development agreement for commercial property for joint development agreement. They never sold a single unit until completion. They never sold a single unit until completion. Developer has taken ITC, not paid GST on development rights. They finally, after OC, went ahead and cancelled the joint development agreement. You know, cancellation goes back in time. Developer had taken ITC on the cost of construction. The same cost he discharged as output tax of construction services, which was more or less the same, because on cost to cost basis they transferred it, and therefore none of the provisions of the joint development agreement or the GST treatment arising from joint development agreement were at all applicable in this case. There was a JDA, but the JDA was cancelled. So therefore, the assertions made under Transfer of Property Act cannot be denied by GST department. So we will now travel, therefore, to look at what is stated in the substantive law and then derive from there what is the implication in the GST law. We cannot simply use expressions transfer, builder, developer, tour operator, JDA, JVA, gift, disposal, sub. We cannot use these expressions lightly. Whenever we use these expressions, we must bear in mind that the meaning ascribed in law to these expressions will now be given in this given transaction. Now, when you look at how allied laws have a bearing, it is very, very significant, because taxpayers are making blatant mistakes as far as their GST provisions are concerned. Buy one, take two. Buy one, take two. I'll go through these examples quickly in the interest of time and in the interest of covering more aspects. In a buy one, take two transactions, taxpayer is paying GST on the actual price collected, whereas the article that is given free also has the same MRP as the article which is sold. So therefore, there cannot be GST paid only on the cash consideration. GST has to be paid on the combined consideration, partly in cash, partly in kind. When you identify these transactions, please be vigilant. What have we told another regulator? My favorite example, sweet box. Sweet box, is it goods or services? And before we answer that, let us pause and consider what is written on the sweet box. Pure ghee sweets. What does it mean? It will get spoiled within 3 days. After dinner, even if you are very full, please sit down and finish the full box. Otherwise, tomorrow it will get spoiled. Goods given as part of a service is service, which is if it is for food and beverage for human consumption. You understand? Goods given for consumption is service. Sweet box is service. 5% GST, but sweet are anyway 5%, 1905 or 2106. Some are 12, but majority are 5. The difference between 5 as goods and 5 as service is 5 as service is without ITC, 5 as goods is with ITC. You take any sweet meat dealer, all his output tax will be through ITC, because he will get ITC on sugar, LPG, packing material, shop rent, advertisement expenditure. It is to optimize on credit that the dealer is happy to declare this as goods and not services. If you find a sweet box in Big Bazaar having MRP, that means it is meant for redistribution, which means it has preservatives, which means it has shelf life. If it is not capable of staying in the shelf for a certain duration, then it is not meant for redistribution, it is meant for consumption. We know 9963 covers takeaway also. It is not only dine-in. Takeaway also is restaurant under 9963. So therefore, there is no difference between restaurant, bakery, and sweetmeat stall because all are supplying food and drink for human consumption for consumption purpose. Whether you consume then and there or you take it home and consume it. So friends, please bear in mind, taxpayers, some are using mischievous interpretation, but many are genuinely confused because they are thinking logically, they are using common sense, both of which we discovered is very dangerous in GST. So when we look at these aspects, take all businesses and test them on the basis of what is going on in this business. Take an example of company incorporated in 2017. What is the date of commencement of business? Some may find 2017 as the date of commencement of business. But please bear in mind, in 1952, it was held in Western India Vegetable Products that business is not the same as entity. Business is a business only when it can demonstrate income generating capacity. And as you know, section 3 of income tax law, if you don't have a business, if a business is not set up, there is no previous year. That is why revenue expenditure incurred during capitalization period is not allowed as a carry forward except to the extent of 35D. Now in income tax, we are saying that this expenditure cannot be capitalized. In GST, we are saying that it is intended to be used in the furtherance of business. If it is intended to be used, then you should capitalize it. If it is not capitalized, then it is clearly not intended to be used. You cannot take a stand in income tax and say it is a sunk cost without carry forward of loss. And in GST, come and take ITC just because the expenditure is rent, travel, consultation charges, etc. Business is a business only when income generating capacity is established. Unless income generating capacity is not established, it is company but not business. 16(1) does not give credit to company, it gives credit to company with a business used by him in his business. The expression is found in section 16(1). We think only 17(2) and 17(5) we have to reverse. 16(1) itself, there is so much to reverse. So please be very vigilant about how we treat this in income tax law cannot be deviated from as far as GST is concerned. AS 26, India's 38 says only certain intangibles can be capitalized. We capitalize intangibles. Intangibles which cannot be capitalized, we treat it as period cost and charge off to revenue. If you say it is intended to be used, why didn't you capitalize it? Income tax didn't allow you to capitalize it. Income tax didn't allow you to treat it as revenue expenditure. Accounting standard didn't allow you to capitalize it. Now, what is this expenditure? Investor money down the drain. That's all. There is no ITC allowed on these cases. Because if my own assertion in income tax, if my own IT return, if my own balance sheet is given as a proof, then where will I go to argue about this? Now I have to say my accounts are wrong. I have to say my income tax return is wrong. I don't think anybody can take such a diametrically opposing stand. Please harmonize your stand under different legislations. I'll come to contract law. We still have time. Assessee has filed income tax returns in America. Assessee has filed income tax return in America because by saying income attributable to PE is 10 crores. Income attributable to PE is 10 crores. As you know, PE established outside India needs to be, its expenses need to be funded out of remittances from India through normal banking channel. That is FEMA. See, income tax and FEMA are now working together. Assessee has reported income attributable to PE outside India 10 crores, claims expenditure 9 crores, paid income tax in America on 1 crore. This 9 crore expenditure is expenditure incurred in America, salary, rent, transport, electricity charges, whatever he has incurred in America. The supplier of those services are companies from America, no problem. But the 9 crores has been remitted through banking channel in India. When assessee has said that he has a distinct person outside India, expenditure of the distinct person is liable to RCM under para 4 schedule 1 under GST law. It is The debate is not about place of supply. The place of supply is outside India, but for import of services, the place of supply has to be seen inter se distinct persons, head office and PE, and not vendor and PE. So therefore, what you have said in income tax cannot be denied in GST. No, sir, this is completely outside the territory of India. That is completely false. And by the way, Circular 199 does not cover cross-border trade. It covers only domestic transactions. So therefore, what Circular 199 has done, it has exposed the weaknesses in the tax positions, protected the non-compliances domestically, but left the international non-compliance open. Now, 199 itself can create a flood of notices wherever assessees have PE outside India. How will my GST officer sitting in Baliganj know about my PE in California? CBCR, country by country report. What is the 35BA? Some form is there. You have only filed that form. If you look at that form, it is such a scary form. It has all the information necessary to arrive at HSN code, and most of the information is marketing or intermediary. So therefore, you will find, unless you take a stand that my PE outside India is an intermediary, RCM will attract. The safety is to admit it is intermediary, and therefore 13(8)B will keep the place of supply outside India. Please be very vigilant. Income tax law itself has a lot of information that can be indicative of the GST treatment. Another 1st July 22, 194R is introduced in income tax law. Basically, everybody's 194R must be 0. If anybody's 194R returns are not 0, then the other person there is finished. Because the recipient is admitted that a benefit has been given. See, when I give a flight ticket, when a client books a flight ticket to Abhishek to visit Delhi for a hearing, the client is saying it's a benefit. Abhishek is not admitting it's a benefit. Therefore, it is turnover escaping assessment by Abhishek. So you, Abhishek, please book your own tickets and you charge the client. Please tell them no 194R. Because how can two parties to the same contract contradict with each other on facts? I'll give a small example. The very erroneous judgment, respectfully, that has come some time ago from Madras High Court called MIOT Hospitals, MIOT, MIOT Hospitals. What the learned single judge said was, fixing orthopedic prosthetics, nut and bolt. The learned judge said it is a works contract. Local Lobat. He said it's a works contract, nut and bolt fixed, a cardiac stent, all these implants inside a patient is a works contract. There is a goods and services supplied. When two persons enter into a contract and there is confusion about what is the object of contract, how do we find out what is the object of contract? When two persons enter into a contract and there is confusion, what is the object of contract? How do we find out what is the object of contract? To answer this, I'll give another example. Let us say there is a club, Calcutta Club. I don't know anything about Calcutta Club. From the case law, I'm using this name. There is a Calcutta Club. On December 31st, they sell tickets for New Year's night celebration. Unlimited food, unlimited music, unlimited dancing, unlimited misbehavior till the new year begins. All right. And there is going to be some celebrity who will also come, and at 12 o'clock midnight, the celebrity, some film star will come and he will also be part of these celebrations. What is the object of contract? Is it food? It is 10,000 rupees per head. Is it food? 5%? Is it liquor, exempt, non-taxable? Is it amusement, 18%, service? Is it entertainment by the film star? 10,000 rupees single price. If I don't want to consume any liquor, if I don't want to eat any food, I only want to dance till the new year. Can I pay 2,000 rupees and go there? No, it is a single price, multiple supplies, liable to tax at the highest rate. The most important supply is entry into the venue itself is a supply. Entry into venue, without entry, you can't even eat the food or drink the drinks and dance there. So therefore, it is a mixed supply taxable at 28%. Taxable at 28%. So therefore, friends, what we will, when a contract is entered into between two persons and there is confusion about the object of the contract, you have to ask between the two, the one who knows lesser about the subject matter, you ask that person, आप क्या सोचते हो, क्यों आया हो यहाँ पे? नहीं, मैं तो शाहरुख खान को देखने के लिए आ गया. एंट्री फी, खाना पीना तो बाद में, वो तो कहीं पे भी खा सकते हैं, शाहरुख खान से मिलना है. You understand how it is? In a Miot hospital case, you ask the patient, are you buying orthopedic implants from the hospital? What are you buying? Patient will say, जान बचाने के लिए आ गया इधर. It is a service. You want to put nut and bolt, you put. You don't want to put a nut and bolt, you want to put white cement and send me. That is also okay. बस तसल्ली देके भेजोगे तब भी मंजूर है. I will give money. So therefore, object of contract is very fundamental. So when you look at object of contract, we have to dive into contract law to find out what is object of contract. Most of the time, we don't know what is object of contract. So therefore, when you look at object of contract and out of the two persons who knows lesser, that person's opinion will prevail, then we have to be very careful when there are what is called standard forms of contract. What is standard form contract? Anyone who has taken housing loan, you know what is standard form contract. Last minute, along with disbursement check, one big book is brought in multiple copies and 1,000 pages you have to sign straight, cross, sideways, front, back, up, down. You, your father, mother, wife, everybody have to sign. Anybody has read the contract? Nobody has read the contract. It is called a standard form contract. There's a rule of construction called contra profferentum. When a standard form of contract is presented and there is ambiguity in the terms of the contract, then the interpretation of the terms will be against the party who wrote the contract. When there is a standard form of contract and there is ambiguity about the terms of contract, the interpretation of the terms will be against the person who wrote the contract and in favor of the person who read and signed the contract. So when you look at any contract and the object is ambiguous, please be very careful. The client may think he is only providing platform services. You fellows are doing rummy and poker and all these things. Please ask the person who is knowing lesser about this transaction as to what is the purpose of the contract. You go to this platform to play cards. The company thinks it is not card. Arey, pagal, you think you're playing cards. I don't know what you are playing. तुम लोग 10 जने मिलके पता नहीं क्या कर रहे हो. मैं तो बस टेक्नोलॉजी दे रहा हूं. Contra profferentum. The one who knows lesser about the object of contract, his opinion matters. The one who knows more opinion about the contract, he need not, his opinion does not matter as much. So therefore, friends, please be extremely careful and vigilant. When you identify a transaction, let's not outsource our thinking and give it to the client and let the client feed us the facts. Client will only give information. We will distill that information and arrive at the fact. So when you look at the object of the contract, we have to be very careful. Speaking about contract, this is I think second or third time I'm getting to share this aspect. It's a slightly long example, but a very essential example to share this point. A lease agreement for 12 months for a equipment, some machinery, 12-month lease agreement. Please consider whether it is 12 identical agreements, 12 identical contracts, or is it one contract with 12 payment installments? I'll repeat this question. And you can think about it. If there's a lease agreement for lease of machinery for 12 contracts in one document, or is it one contract with the 12 installments to pay? The answer is it is 12 contracts. Since all 12 contracts are identical, there is no need to sign it 12 times. You sign it once and say the term is 12 monthly lease contracts. The reason why it is 12 contracts is if it is one agreement, one contract, then there will be only one time of supply. We should pay entire 1 year's lease GST in first month itself. It is not 12 it is not one agreement, one contract, it is 12 contracts. That's why we have 12 times of supply. Every month is a time of supply. So therefore, friends, when you recognize that there is a huge difference between a contract and a document, then you will start looking for what is the contract. The contract is not the document. The contract is offer and acceptance for valid consideration of a lawful object. That's all. An agreement enforceable by law is a contract, 2H. So a contract is offer, acceptance, lawful object, and consideration. So when there is a document, is it possible, is it necessary that the document must always contain only one contract? A building. The contract also contains water to be supplied by the client at a fixed rate. At a fixed rate. Now, is this one contract or two contracts? For construction work, one contract. For water supply, another contract. Both are contained in the same document because it relates to the same project. So therefore, friends, we have to find out what is the contract from within a document. A document can contain more than one contract, and in each contract, the roles of the parties need not be same. It can be reversed. In a construction object, the client is the customer, recipient of supply. The contractor is the supplier. In supplying water, the client is the supplier and the contractor is the recipient. So there can be role reversals of each with respect to each object for the respective contract in the same document. So we will call this a composite document comprising of multiple contracts. GST, every supply is itself a contract. So the treatment of GST must apply respectively to each object. Works contract will be liable to tax on works contract basis. Water supply will be liable to tax on water supply basis. There cannot be a composite treatment on net basis. I'll give a small example. There is a prepaid instrument, coupon. You pay 1,000 rupees, you will get a coupon of 1,000 rupees face value. You can go and buy any article that you can that is permitted, and when you get the bill, instead of paying cash, you will give this coupon, and it will settle the liability, because this is nothing but money, because you have already stored 1,000 rupees in this coupon and you're giving this to make your redemption purchase. Now you look at it this way. I buy coupons, 1,000 rupees coupon, I will buy, but I am a distributor. I am not an end user, I am a distributor. I will pay 1 crore in the beginning to buy coupons, and I will ask this company, what is the price you will charge for the coupon? He will say, I will give you 1,000 rupees coupon for 950. Now you please examine whether 50 rupees is discount. Friends, discount has to be given for goods or services when it is supplied. Discount cannot be given for money. I will give 500 rupees note. You will not give me 400 rupee notes. You have to give me 500 rupee notes. If you give 400 rupee notes, then you're a wonderful businessman. If I give 500 rupees and I ask for change, you have to give me the total. Can I say, give me 500 rupees, I will give you 450? Not possible. Transactions in money have to be always at face value. Now you please see what is happening. I paid for 950, I got 1000 rupees coupon. The reason is 50 rupees I need as margin to find more customers and sell. Actually, there are two supplies here. I am giving you 1000 and you are giving me this prepaid instrument. I am giving you are giving me 50 rupees to be your distributor. There is a service given by me to you for 50 rupees value. Instead of you giving me 50 rupees and collecting 1000 rupees from me, you are collecting net 950 rupees. There can never be discount in money. So the distributor is not a what is called a regulated entity. Regulated entities are entities who have license under Payment and Settlement Systems Act 2007 to issue prepaid instruments. So therefore, when we look at a transaction, we should identify whether the transaction we are seeing is the net value of two cross-cancelling supplies, or is it the gross value of one supply. 1000 rupees voucher coupon will never be given for less than 1000 rupees. It has to be given only for 1000 rupees. And because when you go and redeem this 1000 rupees, you will redeem for full face value of 1000. If you have a bill for 1200, you will give this coupon of 1000, you will give 200 rupees cash. That is how the shopkeeper will let you go. If you don't give the full 1200 rupees, the shopkeeper will keep you in the shop. So therefore, friends, please be very careful. When we see transactions, let us not assume discount to exist whenever lesser money is given. It could be two supplies cancelling each other out and the net value only being supplied. When you look at a discount, who can give discount? Discount is a discount only if it is on the invoice. Discount that is not on the invoice is normally bad debts. You understand, out of self-respect, we call it discount. When we're closing accounts, we'll call it discount, but actually discount requires bilateral consent. Two parties should sit together, negotiate and agree. That is what is discount. The limited scope available in GST is, the limited scope available in GST is 15(3)(b). The discount is known beforehand. The discount is known beforehand, subject to a contingency which will be discovered afterwards. Discount is known beforehand, that you will get quantity discount at the end of the year 10%. End of the year only you will know that you have fulfilled the annual quantity of take or not. So therefore, friends, please, let's not use the word discount lightly. Discount is invariably bad debts. Now I will give you another example. Discount with a contingency must satisfy 15(3)(b) and credit note under section 34. Discount that does not satisfy 15(3)(b) or section 34 is not discount. Then rule 37 will come into play and reversal of credit will become attracted. The other aspect to consider is, when you are giving a discount, examine whether there is a discount attached with obligation. Discount attached with obligation is actually incentive for a service. You please promote. Let us say I am a retailer of multiple brands of electronic goods, A company and B company. I am selling A company products also, B company products also. A company people will come and give me an incentive if I sell A. See, bear in mind, the manufacturer has sold the stock to the dealer. Whether the dealer sells or he destroys the inventory, why manufacturer is so interested? Manufacturer should not be interested because his sales are already complete. When the manufacturer takes interest in the dealer further successfully selling his product, actually the manufacturer A is giving incentive to sell A. Really what is happening is to not sell B. The incentive is computed on the quantity of A units sold. But the underlying motivation is to not sell B, then A will give. Now, B will also give the same incentive. So, friends, whenever you find something called a discount, please be very careful to find out whether it is tied to an obligation or it does not have obligation. Because obligations are already fulfilled, no? Any remaining obligation is my own interest. Why manufacturer is interested whether I am selling it or not selling it? I'll give another example, very interesting. If you look at section 63 of Indian Contract Act, there is a customer who has to give me 1 lakh rupees. But he is going to give me 1 lakh rupees 6 months later. Contract law permits me to collect 96,000 rupees today. Contract law itself says you can collect the consideration tomorrow, 6 months later, or you can collect a lesser consideration today itself. I'll give a small example, very, very important example. Stilk versus Myrtle. An English judgment, what happened was there is a ship that is going in the sea. There's a ship going in the sea. The sailors in the ship have the duty to operate the engine of the ship and take it from one port to another port. The captain of the ship is in charge. On behalf of the owner of the ship, the captain is the person. What happens is the ship goes in the middle of the sea. The sailors come to the captain and say, you give us extra money. Otherwise, we will not take the ship to shore. Captain says, what is this? You're asking for extra money. We already agreed how much money I have to pay you to take it from port A to port B. How come you are stopping the ship in the middle of the water and asking for extra money? We don't know all those things. We want extra money. Captain says, okay, agreed. Writes it down, signs it, round Sam, all that is done. Now what happens is the ship is taken to the port. The sailors go to the captain and ask for money. The captain says, I will give you the original amount, but not the additional amount. So they take him to court. They tell the judge, my lord, this captain agreed to pay us extra money. Now he is going back on his promise. So therefore, we want to enforce this supplementary contract. The judge asks the captain, is it true you have agreed for additional consideration? He said, yes, I had to agree to this. Then why are you not paying this additional consideration to the sailor? So the captain said, this supplementary contract is not an enforceable contract at all, because consideration, as you know, both the parties must receive consideration. Normally, we refer to consideration as payment made by buyer. Normally, we refer to consideration as payment made by buyer. Actually, the buyer gets the seller gets a consideration in the form of money paid by buyer, and buyer gets consideration in the form of goods given by seller. If only one of the party has consideration, then it is a void contract. Both must have consideration. One will have goods or services, other will have money. If both are having goods or services, it is barter. So therefore, in this example, Stilk versus Myrtle, the captain said, I don't have consideration for giving this extra money, because what they originally agreed to do, that only they are doing now also. Therefore, I have already agreed for original consideration. No consideration is flowing to me for the additional payment. Therefore, I will not pay. The judge said, perfectly correct. You please go. Friends, please bear in mind, when the dealer of the goods has obligation to sell the goods he has purchased. Why he is getting incentive? What new things he is doing now? If he is doing the same things he was doing originally, then there is no consideration to the manufacturer for giving this additional consideration. And when additional consideration is given, then there must be a supply. And when supply is not goods, it has to be services. In a contract, in a document, there can be two contracts and the roles of the parties can be reversed in the same document. I will sell the goods to you. You will provide extra marketing services to me by suppressing the sales of competitor brand. Friends, please bear in mind, facts are poorly understood even by regulator. But the business does not even go into all of these details. I'll give you another example. If you buy Kit Kat, this is a case of Nestle versus Compton, one judgment. If you buy Kit Kat, you will get one audio cassette for 10 rupees. This is not a judgment in India. I'm using Indian rupee as an example to make it easy for us to understand. You buy Kit Kat for 25 rupees. I will sell the Kit Kat to you. Now, if you give me 10 rupees, I will give you an audio CD. I will give you audio CD with a very famous singer's songs record. What is that? Taylor Swift. That singer songs will be in this CD. I will give you this CD for 10 rupees. Now, the terms of this CD contract is, you give me 10 rupees and you give me 2 Kit Kat empty wrapper. You just go anywhere you find 2 empty Kit Kat wrapper. You bring 2 wrapper. Come, bring 10 rupees. 10 rupees plus 2 wrapper, I will give you Taylor Swift CD. I don't know nowadays CD stopped or what, I don't know. But anyway, you assume this example. This matter went to court to decide the valuation of the CD. So the judge said, consideration is the total money paid by buyer, not total money, no, not just the cash paid by buyer. So they said, how much should the buyer spend to get the CD? Oh, he has to spend 50 rupees, 25 for 1 Kit Kat, 2 Kit Kat, 50 rupees plus 10 rupees. So the court valued the CD at 60 rupees. Friends, this judgment is so directly applicable in our job working, works contract, contract manufacturing, treatment or process on goods belonging to another. How can we leave this principle aside and assume that I will pay GST on 10 rupees? Please be very careful. Another example. Person is running a rice mill. Rice mill. As you know, food items from chapter 1 to 22 liable to GST at 5%. I am a miller. I will receive paddy. I will do milling operations, convert it into rice and give back the rice to the farmer. All right. Now, what is the rate of GST payable on milling charges? Chapter 1 to 22, milling charges is 5%. But please be very careful. The tariff uses the word job working charges for articles in chapter 1 to 22. 268 defines job work as treatment or process on goods belonging to another registered person. Is farmer a registered person? Farmer is not a registered person. When farmer is not a registered person, what you are doing is work, not job work. 5% is not applicable. Residual rate applicable at 18% tax. So better tell farmer to take registration. APMC yard, that Pakka Adatia, when he buys paddy and gives it for milling, he is also not registered. You understand? So please be very careful whether if you are job working, the other person must be registered. Now you take one more example. This milling operation, he has made 100 crores milling charges. 100 crores milling charges. He has also shown turnover of 10 crores sale of bran, 5 crores sale of husk. On bran, he has paid 5% tax because bran has 5% tax. Husk has no tax. So On 100 crores, he has paid 5% tax. Now he will get show cause notice for 18%. On Bran, he has paid 5% tax. He will again get show cause notice for 18%. On Husk, 5 crores, he has not paid any tax. Now my question is, nemo dat quod non habet. Nemo dat quod non habet. He who does not have cannot give. If you are transferring a valid title, first you must show you are having valid title. If you're transferring valid title, first you must show you are having valid title. We take to Transfer of Property Act, very beautiful principle there in section 55(2). The one who transfers must himself have valid title. If you don't have title, you cannot transfer any title. Now, this rice mill operator, he is selling bran, he is selling husk. Where is the purchase in his financials? How can there be a sale without a purchase? How can there be a sale without purchase? If there is a sale without purchase, then it is not a sale. What is the money realized from sale of bran and sale of husk? Who does the bran belong to? Who does the husk belong to? It belongs to the person whose paddy I have received. So therefore, that 15 crores of bran and husk which I have sold is not my bran or husk. It is additional job working charges that I have realized from disposal of somebody else's material, liable to GST at 18% tax. So friends, please be very careful. Allied laws can feed so much new information that it will be simply impossible for us to understand. Just to take this example one step further, if you're already not shocked, you will not get a show cause notice for 13% because there is no 6.5% GST rate. You will get a show cause notice for classification dispute. You will get a show cause notice under 2 sections. You have collected 5% tax, so you are liable to discharge that tax under 76. You are supposed to pay tax at 18%. You will get a show cause notice under 73 or 74 for 18% tax. So we will end up paying 23% tax. So therefore, friends, there can never be a notice for 13% because adjustment of tax, wrong tax paid is not allowed. You are aware 77 and 19, whether the tax is under the wrong act or within the act under the wrong schedule, goods and services, it cannot be interchanged. Between goods and services, there can never be any adjustment or settlement of liability. It has to be demanded afresh. So when you look at a contract document, I want to submit to you to please consider what is breach of contract. What is breach of contract? See, entering into a contract is a very time-consuming process. Entering into a contract is a very time-consuming process. You cannot enter into a contract, 2 months later find that the contractor is not performing properly, terminate that contract. There will be far more loss for recontracting. The process of retendering and recontracting will incur far more loss than telling the contractor to pay some penalty and continue the contract. So whenever there is a contract, we have to find out whether the contract contemplates various eventualities. I'll give a small example. You have to construct the road in 2 years. Every month you have to give bills. This is the terms of the contract. If you don't construct a road, but you are constructing a bridge, is the contract liable to be terminated or not terminated? The object of the contract was road, not bridge. What I agreed with you, you must supply. If you supply something else, it is a fatal breach of the contract. So therefore, contract will be terminated. You have to construct the bridge within 2 years. 1.5 years are over, no work progress. So the client asks, I want to terminate this contract because in 6 months you cannot finish the construction. So better I terminate the contract and save 6 months than wait for another 6 months and then discover that the road is not constructed. Then also there is a fatal breach of the contract. There's a third kind of situation. Every month you are supposed to give invoice by the 5th, but the contractor is giving the invoice by the 20th. See, when the bill comes on 20th, payment will get delayed. When payment is delayed, TDS will be delayed. When TDS is delayed, interest will apply. So therefore, for all these reasons, the client says you have to give invoice within the 5th. If you give invoice after 5th, every day you have to pay 1,000 rupees damages. Every day delay, 1,000 rupees you have to pay. Now, the contractor does not give the bill on the 5th day. Can the company say, I will terminate the contract? Friends, when you look at any contract and the terms of contract, we have to understand whether the breach is a fatal breach or a non-fatal breach. Is the breach a fatal breach or a non-fatal breach? When there's a fatal breach, the contract stands terminated. Now, you cannot discuss terms of a terminated contract. Supply requires contract. When contract is terminated, terms of the terminated contract cannot be discussed. I'll give an example and come back to this example again. There is a rental agreement for a building, shop, 10,000 rupees per month rent. During Corona, the tenant says, I cannot pay rent because my shop is closed. Is GST payable or not payable on the rental amount? Of course, it is payable. Corona or no Corona, shop is given to you. So therefore, you have to pay rent. You are not paying rent. I will file a case to recover the money from you. But the GST you have to anyway, the landlord has to pay to the department. Now, during Corona period, after the lockdown, the owner terminates the contract. But the tenant continues to be in occupation of the premises. They file a suit for what is called mean profits. It is spelled as MESNE. It is mean profits. He files for mean profits and court awards 10,000 rupees per month for the duration of holding over. Is GST payable? Answer is no, because the holding of the property was after termination of contract. GST requires contract. If contract is not there, then actions of parties cannot attract incidence of tax. Now we will take this learning and come back to this construction example. I asked you to construct a road. 1.5 years, you have not constructed the road. It's a fatal breach. GST cannot be applied based on the fatal breach of the terminated contract. Instead of constructing the road, you have constructed a bridge. Is GST payable on the bridge construction cost plus 10%? Answer is no, because contract is terminated. Yes, GST will be payable if subsequently the client accepts the bridge. I will manage the bridge and only the remainder of the road I will ask somebody else to come and construct. Please examine arbitral awards. Just because a court or an arbitral tribunal has awarded something does not mean it is always compensation. Arbitral awards can be only the forum of enforcement of the contractual payments that have to be made. For bridge constructed, you have to pay 250 crores. That means GST also will attract. Now we will come to the other example. Non-fatal breach. You are supposed to give the invoice on 5th. You have given the invoice on 20th. I will charge 15 days into 1,000 rupees, 15,000 rupees. I will charge you some money. We may call it penalty. We may call it fine. We may call it liquidated damages. It is consideration. It is consideration. Why? Because it is a composite document. Contractor was a supplier. Client was the recipient for the construction work. Client was a supplier. Contractor was the recipient for the late payment charges. So you understand how for delay in issuing the invoice. So friends, please bear in mind, Southeastern Coalfields, the judgment that has come from, that has got upheld in Supreme Court. There is a Madras High Court, Madras Sestat judgment of REPCO. In none of these decisions, I have found examination of fatal and non-fatal breach. I have not found explanation whether the amount called as late payment charges, punitive charges, is it a consideration or not? So when you look at consideration, it becomes very important to understand what section 2D contract law has to say. Consideration, when at the desire of the promisor, the promisee or any other person does or agrees to do act, abstinence, forbearance. So therefore, consideration always flows at the desire of the promisor and it should flow from the promisee. Now, if I go to a shop, they are selling shoes. Who is the promisor? Shopkeeper is making the offer, or shopkeeper is only making a advertisement, invitation to offer, and I will make the offer. Please bear in mind, promisor, promisee can change, will change depending on who is the offerer, who is the offeree. Many times we will interchange these two and forget it. Offerer, offeree requires 3 days of discussion to come to a conclusion. I will only leave you with this thought that let's not assume the seller always makes the offer. Seller can make an invitation to offer, buyer can make the offer. When you look at these aspects, it has to come down to the point of consideration. I will give you 2 examples to consideration itself is a very long topic. I'll give you 2 examples to highlight what is consideration for you to now carry this forward into your own study of this topic. There was a time when everyone got fever, cough, cold fever, influenza. One company came and said, we have come out with a new medicine. Anybody who consumed this medicine will not catch the cough, cold and fever. If you catch the cough, cold and fever, you come to us, we will give you prize. To show that they are serious about giving the prize, they said, we have deposited £1,000 in Bank of England. Anybody who comes, we'll give £100 prize. That time £100 was big money. So one lady, Carlyle, consumed this medicine, but she caught the cough, cold and fever. So she went to the company coughing and said, where is my money? The company said, no, what are you talking? That is only advertisement. Only show. We are not serious about giving anybody any money. There is no contract. Now, this went to the court for analysis. It's a very landmark judgment in all Commonwealth countries, where the court said, is this advertisement just a puff, show, or is it a serious contract? They saw, if you are not serious, why did you put money in the bank? You wanted people to act on your offer. Second, they said you are not accepted the offer. See, when you look at the offer will tell you whether you must accept it or you can act upon the terms, it will amount to acceptance. They never said, if you want this medicine, you come to our dispensary, take this medicine and go. They said, wherever you find this medicine, you take it. If you catch cough and cold, you come for the prize money. So catching cough and cold, they said, is not the consideration for the company. Company gave an offer. What is the consideration for the company? The court said, consuming your medicine itself is the consideration. Then why you are giving £100? You consume this medicine, I will give you £100. Now you take this example. Consume the medicine is consideration for me. I will give you £100. That is consideration for you. Now, catching the cold is what? It is a condition to the contract. You come with a cough, that is proof that you are winner. Now you please take this example. Carlyle versus Carbolic Smoke Ball Company. We have all studied this from CA Foundation days. Carlyle versus Carbolic Smoke Ball Company. It was a very serious offer, not an invitation to offer. Acceptance not required, merely acting on the acceptance. It amounted to a contract. Consideration was kept in the bank. So therefore, consuming it is a consideration. Getting the cough is a condition. So friends, we have to understand difference between condition and consideration. Condition to contract, consideration of contract. Where do we use it in GST? Carlyle versus Carbolic smoke ball. Where will we use Bhagwan Das Kedia judgment of Supreme Court? Where will we use this judgment, these judgments in GST? Company announces higher education scheme for employees. Company announces higher education scheme for employees. Company announces iPhone watch, that iPhone watch, Apple Watch scheme for employees. Company says we are giving gift of Apple Watch to employees. More than 5,000 rupees, if you give a gift, 192 will attract. 50,000 rupees in Schedule 1 is useless. 50,000 in Schedule 1 is useless because above 5,000 rupees, 192 already attracted. Once you pay 192, Schedule 3 will come to your rescue. Now we will examine whether you are giving this watch for a consideration or no consideration. No, just like that I'm giving Apple Watch. Why you are selecting your employees? A very nice judgment. Corson Car Ferries, which said, in the course of business, claiming something to be a gift is remarkable and unbelievable. When it is taking place in the course of business, you cannot say it is for free. It is always with a motivation. Now you see, any businessman, whether he will give something in return for nothing, he is giving Apple Watch. I don't know how much it costs. Let us say it costs 25,000 rupees. He is giving this watch so that those people who get the watch will work extra. Other people who see that these people are getting this watch, they will work double extra. In business, nothing is free. If any businessman says it is free, there can be nothing farther from the truth. And if you accept that it is free, there is nothing more lunatic than that. So therefore, please visualize why you are giving it to your employees, why you are not giving it to ex-employees, why you are not giving it to new joinee, new person who joined. First give him Apple Watch. Lifelong he will be here only. He thinks he's going to get watch every year. He will get watch but no salary. You understand? So please be very careful. Consideration to contract and condition of contract are totally two different things. Now we'll give another parallel. I pay building sanction fees for getting plan approval. I pay fees for building sanction. Department says you have to pay GST on RCM basis because you have paid consideration. Now please bear in mind, payment of statutory fees, is it a consideration or a condition? When you pay building sanction fees, they will accept your application. There is no guarantee that if you pay building sanction fees, you will get approval. They will give you approval provided you accept the modifications. If you don't accept the modifications, they will reject your application. Will you get the refund of the fees paid? No. So when you don't get something in return for something, it is not consideration. So payment of building sanction fees is not consideration, it is condition. You pay 100 rupees to visit Taj Mahal. If you don't pay 100 rupees, what will happen? You will make friends with the watchman, isn't it? So I will propose this concept called withdrawal failure test. Withdrawal failure test. If I don't do that which I'm asked to do, what will happen? If I don't do what I am asked to do, what will happen? If I don't pay building sanction fees, what will happen? Application itself will not be accepted. If I pay the money, will my plan be approved? No. You understand? If I don't pay late fees, my 3B will not be uploaded. Is it consideration for accepting my 3B? No, no, no. It is a condition. If I don't pay 100 rupees to enter Taj Mahal, I can't see Taj Mahal. I only have to see the river and come back from a distance. You understand? So therefore, neither the quantum of money nor the point of payment are determinative of whether it is condition or consideration. Please apply the withdrawal failure test. If you don't pay fees, auditor will not do audit. Consideration. But our auditors will do audit even without fees. Isn't it? They will do audit without fees They will pay GST after 2 years, write off the payment also, isn't it? So please bear in mind, apply this withdrawal failure test. If you withdraw from doing what you are asked to do, will the contract fail? Will the performance fail? If the failure is directly linked to your withdrawal from performance, then it is consideration, not condition. We'll take one example. You open savings bank account in a particular bank. ICI Bank. You open savings bank account, zero balance. Zero balance. Now, zero balance bank account, is there a notional value of consideration to be charged? Because they're giving debit card, credit card, etc. We have to examine withdrawal failure test. If you ask for minimum 10,000 rupees balance, then I will not open bank account. So therefore, there is an inherent consideration built into this. But we have to see, this question is pending before, I think, Madurai bench of Madras High Court. One very big case, 38,000 crore service tax demand. But if you see the direction of RIPCO and Southeastern Coalfields, then I think this decision also will fall flat. Nowadays, the trend is, when the amount is small, demand will be confirmed. When the amount is big, you can be comfortable. It will not be confirmed. So look at it from this point of view in commercial contracts. Now, when we say fines, penalties, companies are charging, who has legal authority to to charge penalty? You have to be a regulator, because fines are proportionate to infraction of law. Violation of contract is not penalty. It is called penalty, but it is not imposed by a statutory authority. You understand? So therefore, we should not call it late fee. If you don't pay housing loan EMI, then there will be a penalty interest. It is interest only. Because the rate is more than housing loan, it is called punitive interest. Let's not allow client to teach us the facts. Client has to give us information. We will distill the information to arrive at the facts. So there can be a primary contract and a secondary contract. Primary contract is to repay the loan. The consideration for that is interest. There is a collateral contract for tolerating that, where the consideration is also expressed as a percentage, does not make it interest. Entry 27 of 12 or 17 covers only interest on loan, deposit, advance, not on default. If you default on your obligation, the amount is not called interest or exempt under entry 27. But anyway, decisions are going in favor of assessee. Until it remains this way, I think we are okay, but we need to be aware of the principles of law. Next, can government of India do business activity? Can the state undertake business? Article 298 of Constitution says they can do trade and commerce. So the state can do trade or commerce. I'll give a small example and come back to this. What is the difference between intention and motivation? Intention and motivation. There was a couple. The couple had separated. The husband promised the wife to give 100 pounds maintenance. He promised to give 100 pounds. Later, he defaulted and she went and filed a suit to recover this money. So the husband said, now that they are no longer a couple, he said, for giving this 100 pounds, there is no consideration. So the counsel for the wife told the court, the 100 pounds he has to give so that she will refrain from suing him for maintenance. So the court said, we will only look at the intention of the parties, not their private motivations. We will look at the intention of the parties. We will not get into their private motivations. Intention and motivation, one example that I usually give. I rob a bank to feed poor children. My intention is good, but my intention is bad, but my motivation is good. If motivation somebody has to look at, then I must not be punished. I will keep on robbing banks. I will keep on feeding poor children. Law is interested in intention, not private motivation. Why you are doing what you are doing, tum jano. Why you are doing what you are doing, you should understand. As long as you are operating under an enforceable contract, there is consideration. Company gives this education loan to an employee, does not treat it as salary. It is after all a loan. Why is the company giving? After 3 years, we will square off this loan if you don't leave us after finishing your education. Please bear in mind, if it is enforceable, there is a contract. If there is a contract, there has to be consideration. Apple Watch scheme, enforceable, not enforceable? No, simply I told everyone join. After you join, I will not give you watch. I will delay. If it is enforceable, then it is contract. If it is contract, then there is consideration. You will do work for the company, that is salary. I will give you watch instead of giving salary. That is barter, liable to GST. In a barter, there are two supplies, not one supply. In a barter, there are two supplies, not one supply. So therefore, when you look at these transactions, please identify what is the motivation. Government provides, government can do business. Government provides mobile service. Why government is providing mobile service? Many people say the quality of service is not very good. Government used to run airline. What is the motivation of the government? The motivation of the government could be anti-competition, so that there is no monopoly, there are no cartels formed by private enterprises. So wherever it is affecting public interest, public at large, government also will do. BSNL, previously Air India, government will do various things. So government will do business for welfare motivations, but we are not interested in motivation. We are interested in intention. Immediately what you are doing, you are providing mobile service, pay GST. Why you are doing this, nobody wants to know. So therefore, the next question is, what is stock in trade of a government? Government can do business. What is stock in trade? What is the stock in trade of the government? Stock in trade of the government is natural resources of the country. Natural resource, oil, iron ore, all minerals, spectrum, that is stock in trade. River sand, river water, minor minerals. So friends, please bear in mind, government can do business easily. Government does not do business when it is covered by 11th schedule, 12th schedule. Otherwise, government can do business, and all activities of the government is business under 217H. So therefore, government can do business. Just because government is doing business does not mean it is not supply. And when you do business with government, it is covered by reverse charge. When you do business with government, it is covered by reverse charge. So when it is covered by reverse charge, we have to pay GST. So friends, please bear in mind, when you do business with government, please examine if what you are paying is consideration or condition. If it is consideration, RCM is attracted. If it is condition, RCM is not attracted. Merely because you're making monetary payment does not make it consideration always. Many times you may not make monetary payment. You may not make monetary payment. I'll give a small example. You know, this thermal power plant produces fly ash. This fly ash is not easily biodegradable. Fly ash can be very dangerous for environment and for people. So highway construction companies have an obligation to purchase. Highway construction companies have an obligation to purchase fly ash from nearby thermal power plants and use it and bury it under the road they are constructing. When they purchase fly ash, is it consideration? From the thermal power plant, it is consideration. They are doing it not because of their choice, but they are doing it as a legislative obligation that they have to do under some other law. So friends, please be very, very careful. Very, very careful. Condition, consideration have to be identified and differentiated so that we can recognize whether it is consideration or not. And once it is consideration, if it is from a government, then RCM will attract. Next, 1 rupee consideration. 1 rupee consideration. Is it possible? Nominal, nowadays the famous circular, my goodness, I don't want to even name the circular. 1 rupee deemed to be notional, second proviso to Rule 28. I'll give a small example. Consideration, to be consideration, must be valuable consideration. If it is valuable, then it is consideration. If it is not valuable, then it is not consideration. Absence of consideration makes the contract void. 1 rupee consideration, is it valuable? We have to understand the difference between valuable consideration and adequate consideration. Parties are free to decide adequacy of consideration. Court cannot dictate the adequacy of consideration. I am selling this computer for 5 lakh rupees to Abhishek. Now, if Abhishek says that, unless Abhishek says that there is no fraud, coercion, undue influence, Abhishek has to pay 5 lakh rupees. A court cannot come and say, no, what is this? How can you charge 5 lakh rupees for a computer? You have to charge only 50,000 rupees. Adequacy of consideration is not the responsibility of a court. But if I sell this computer for 1 rupee, the court will not enforce this void contract because 1 rupee makes it nominal consideration. Now, for this, many instances you will find there are lease agreements signed for 1 rupee, 10 rupees, 100 rupees. If you look at 105 of Transfer of Property Act, it says it has to have price. See, the whole of the consideration need not be monetary form. When you have 1 rupee, 10 rupee, 100 rupee, you can go and register the lease agreement. The registration charges will be based on the consideration. You need a monetary consideration to have a document for stamp duty purpose. But 1 rupee or 10 rupees or 100 rupees that you have as a nominal consideration for stamp duty purposes does not become adequate consideration for GST. Consideration, to be consideration, should be valuable consideration. Valuable consideration is not the same as adequate consideration. Valuable consideration is what persons in that trade consider it valuable. Persons in that trade must consider it valuable. When you have a barter, there is no monetary consideration. There is no monetary consideration. See, I'll give an example. Chartered accountant charges 2 lakh rupees audit fees. Rent for 1 year is 2 lakh rupees. So the owner of the building and the chartered accountant enter into an understanding that I will not pay you rent, you will not pay me audit fees. But we have to understand, is this a barter? Please bear in mind, if the audit fees is 2 lakhs, rent is 2 lakhs. It is not a barter. There are 2 supplies. Only debtor and creditor are being settled. Settlement of debtor with creditor does not mean the same as barter. Settlement of debtor with creditor is not the same as barter. I will give gold to job worker. Job worker will do job working, 5% wastage allowed. I will not give him any money. What is happening? 5% of the quantity of gold is job charges. The job worker is purchasing the gold because job worker cannot pay GST on job charges and leave it because it's a barter. He has purchased the gold because without purchase, he cannot make a sale. Imagine a job worker has wastage of 1%, 4% gold he has in stock. He will accumulate the 4% and make jewelry and sell it. He will have sales without purchase. So please be very careful. Is it a barter or a cross-cancelling supply with settlement? Is it a cross-cancelling supply with settlement or a barter needs to be very carefully understood to identify whether these transactions are subject to GST on what basis is important. When there is a barter, what is the accounting entry to be passed? Money measurement concept in accounting does not prohibits Money measurement concept in accountancy prohibits passing of accounting entries. In a joint development agreement, landowner will have land for 2 years. In the 3rd year, land will vanish. Apartments will come into his balance sheet. He has done a joint development. No accounting entry, no concealment of information here. GST has traveled beyond the books of accounts. There's a debate about prior to 1419, there's a discussion how we will value the development rights. Take a small example. I have a laptop worth 5 lakh rupees. The MRP is 5 lakh rupees, let us say. I don't know what kind of laptop it is, but some nice laptop, 5 lakh rupees. There is a cricket bat signed by Saurabh Ganguly. All right. Saurabh Ganguly has given autograph on a cricket bat, and there is a laptop worth 5 lakh rupees. Abhishek has that bat. I am having this laptop. I will give the laptop to Abhishek. Abhishek will give me the bat. This is not a debtor creditor getting cancelled off. This is a barter. Now my question is, what is the value of Saurabh Ganguly autograph bat? Consideration always has to be equitable exchange. I will give you more for less, means it is not valuable consideration, it will be void. Whenever there is consideration, it always has to be equitable consideration. I will give you this these goods, you will pay me 10,000 rupees. So it is equitable exchange. The worth of the goods is 10,000 and the money paid is 10,000. If the worth of the goods is 10 lakhs, money paid is 10,000, then the contract itself is void, because the consideration, even if it is 10,000, it is still nominal compared to the worth of the goods. So therefore, when you look at this laptop with a bat, the value in a barter, when you agree it is a equitable exchange, the monetary value that is determinate will be exactly equal to the monetary value which is indeterminate. The monetary value of that which is indeterminate has to be exactly same as the monetary value of that which is determinate. So therefore, the value of the bat is nothing but 5 lakh rupees. There can be no debate. How do we say there is no debate? It is an equitable exchange because it is a valid contract. In a valid contract, there has to be consideration. When there is consideration, it has to be always equitable. Doctor bills patient. Doctor pays money to hospital. All right. Doctor bills patient. Doctor pays money to hospital. Payment made by patient to doctor is healthcare service. Payment made by doctor to hospital is it healthcare service? It is rental of hospital infrastructure, business support service. Always hospital must bill patient, hospital must give fees to doctor. Then both will be healthcare service. Now let us take example of healthcare. Entry 74 talks about healthcare. What is difference between care and cure? Healthcare, does it mean patient should be cured, or it is not necessary that patient is cured? It is health care service, not cure service. So therefore, even if patient does not recover, it is still exempt from tax. If you take, there is this kada they make at home. It has a lot of curative properties. Nobody knows what is used to make it. It is a secret in every family. They will make and give it to neighbors, but they will not tell the recipe because the recipe is in the mind. All right. Is kada, kashayam as it is called, kada medicine? Is kada medicine? Everything that is curative need not be medicine. then brandy with warm water will be curative and it will be classified as medicine. So please be very careful. When you look at vaccination, is it medicine? What is requirement for medicine? Medicine requires 5 ingredients. There must be a physiological condition. The medicine must be prescriptive. It must have dosage. It must be curative, and it must belong to a recognized body of medical pharmacopoeia. Ayurveda, Unani, Allopathy, Siddha, Ayurveda, recognized body of medical pharmacopoeia. Your CADA is a mysterious body of knowledge. So therefore, even though it is curative, it is not medicine. If a physiological condition is necessary, then is vaccination. Everybody is healthy. The government said, please go take vaccine, give your Aadhaar number. There is a software. Every day we are going to monitor. If you don't take vaccine, you cannot enter the mall. Correct, no? What is the problem that the person took medicine? ICMR declared healthy people to already be predisposed towards this condition. So therefore, even though they are, see, sickness is not physical difficulty. You see a person, what happened? You look so sick. No, I have a terrible boss. That is why I'm looking like this. Otherwise, I'm healthy. People can look sick for various reasons. Looking sick is not a necessity to have an illness. Looking sick has nothing to do with having an illness. Physiological condition is a condition of the person, not necessary that it should manifest in a visible manner. So therefore, when you look at entry 74, there's a lot of confusion in the department that everything is, not everything is exempt from tax. We have to understand that when healthcare services are provided, there is a substantive law called Clinical Establishment Registration Act 2010, under which there is a recognition given. There is in Coorg, there's a hill station nearby in South India. They have a resort. They are having package, 3 nights, 4 days package. They are treating it as exempt healthcare service. Ayurvedic resort. We only have to establish whether they have a clinical establishment registration or not. You can't go there, relax, watch TV, play tennis. See, if you relax, eat properly, sleep properly, and play tennis itself, you will get better. That does not mean you have got healthcare treatment done, isn't it? If all Chartered Accountant Office gives 10 days holiday in the month of August, everybody's health will improve, isn't it? That does not make it healthcare service or a clinical establishment. Friends, substantive law will guide that course of treatment to be followed as far as how we will need to examine it in GST point of view. So when you look at it from this point of view, please recognize whether we have a good grasp of where are we getting this information. So many aspects that we need to cover as far as allied laws. Probably 2-3% of the topics we were able to touch upon, only scratch the surface to arouse your interest for you to now commit yourself to a deep study about this area, because a lot of information is available to the government. Today, more than ever, exchange of information is taking place. And if you see the last season in service tax, the dangerous use of exchange of information, you can only imagine once machine is learning and the intelligence becomes artificial, what new conclusions could be derived. So therefore, we have to recognize that taxpayer is not someone who is in a position to offer us facts. It is such a remarkable lesson for all of us that we assume taxpayer knows exactly what the legal meaning of the expressions are, and we somehow abdicate our duty to discover the facts. In GST, truth does not matter, facts do. I thank DTPA for giving me this opportunity, all members for your participation. I'll hand over the session to the MC to help us with the questions that are there. I would only submit the questions should be, if it could be questions that has come after due consideration of some of these principles, I will appreciate it. It should, if it is random doubts that are coming to your mind suddenly, then I would only allow you to give yourself a chance to contemplate some more before airing those questions. But if you still feel an uncontrollable urge to air those questions, please do so. But I will just hand it over to the others to help us with these questions. Thank you very much. Abhishek, you're on mute. All right. All the experts I can see on the screen. I wonder why I am answering all the questions. Yes, sir. Agalwala, sir.
Yeah.
Namaskaram, sir.
Namaskar. Namaskar. Namaskar.
So thank you so much, sir. It was indeed a pleasure.
Yeah.
And sir, you have taken us through sweet and bitter and everything. You have taken us to Kit Kat also. So it was indeed a wonderful way of closing the entire litigation series. And I think, sir, the insights that you shared, I think that is always going to help us, in fighting the litigation. Though I say that we have to hear your session more than once, so that we can imbibe, what you're trying to tell us. But I think that was indeed wonderful. And all the participants will also agree with me. So with this, I think we can have the question and answers. So I would request everyone to kindly share their questions, if any.
Beauty of
Before that-
Jatin sir is the passion with which he speaks and whatever he says with an example. Always he gives so much examples, so many examples. So he makes the things very easy to understand actually. Such complex provisions. And he rightly said, we always say, collect the facts from the client. He rightly said, we collect information from the client and we distill those information and we arrive at the facts. I must say. Brilliant session. Please continue, Guru.
Sir, before going to a question answer session, I will just take a minute. Sir, this 2 hours, indeed everybody will acknowledge it was a learning session. The first line of the book written by Sir is, a tree is actually a warehouse of the fruits in it. This first line itself of the allied laws, so this thought process is something, sir, which is incredible. And thank you, sir, to lay down a mechanism so that we can learn all these things, we can know all these things. Now I will never see Apple Watch the way before I used to see before the session. And then thank you for giving us valuable versus nominal consideration, care versus cure. This is like
Yes.
again to be taken, and more thought of. Sir, before we jump into the question and answer session, since we shifted the session from physical to virtually, I am, having your memento, taking on your behalf. Will be handovering to you, sir. Next time I'm meeting you. Thank you so much, sir, for the amazing session.
We would like to see the 5 lakh rupee laptop that the sir is given to you.
Yes, sir. So certainly, sir.
And sir, we would have been privileged to hear you physically, but situations had to be otherwise, so we had to take this decision. So it is already there. So I just wanted, one question from my side. Sir, what would be the impact of electronic evidence that we see in GST law? Like, because in many of the cases, they are taking a tally backup and maybe copies of all the bill registers and all. So how far they can be acceptable as an electronic evidence?
See, as long as you are not, as books of accounts itself are unreliable as a source of evidence. Electronic information is evidence under IT Act. But it so happens that although it is electronic evidence, it is books of accounts. So therefore, it is not by itself evidence without corroboration. So therefore, please give tally backup. Doesn't make any difference.
So any of the delegates, if you have any questions, and we are also privileged, I would like to share that we have participants across India from north to south, east to west, and also from people from practice as well as industry also. There is a huge presence from people from industry also, who are also, I'm sure, benefited from this deliberation of yours.
Sir, one more question.
Yes, sir.
Sir, amount paid it to government for excavation of mines, whether RCM is applicable, sir?
Applicable, sir. Applicable. Sovereign commerce. So there's a chapter on sovereign commerce.
Hmm.
I know this decision is pending
Yes, sir. Yes.
After India Cements versus State of Tamil Nadu, Kesoram versus State of West Bengal, and then Mineral Area Development Authority versus Steel Authority of India. After all that, it is taxable in my reading of this law, and on discharge on RCM basis.
No, sir, you are told that just now condition, whether it is condition or consideration, sir. This
You apply the withdrawal failure test, sir. If you don't pay this, what will happen? They will not let you touch the granite or the sand. So therefore, it is consideration.
whether RCM is applicable. But sir, Virudhunagar Association in the Madras High Court states that it is not, there is no RCM is applicable, but the Supreme matter is pending in Supreme Court, sir.
So what happens is when matter is pending in the court, we have to take a stand. And in GST, we have a very clear circular, I think 164, very clearly it says it is taxable. So therefore, if we take a stand, it is not taxable, it is at our own peril. But only relief is that if you pay today, you will get credit. 164 won't apply to RCM.
Okay. But your opinion, sir, whether it is tenable as per law, sir? This,
yes, sir, I would feel so. I would feel so. There's one analysis of this royalty. It's called mineral laws. One chapter in the book about mineral laws is analyzed. So you might like to consider that. But yes, sir, it is tenable.
Okay. Okay. Thank you. Thank you.
Thank you.
Abhishek, will you take the questions?
We have some questions in the chat box.
Yeah, there are questions.
I'll read, yeah. So slot booking charges are charged for export to Bangladesh. Is it leviable to RCM?
Yes, sir, if you apply the same test, withdrawal failure test, if you apply, if you examine that it's like an entry fee. If you pay this to get in, and if you don't pay, you'll not get in. It's not like your application will be considered whether or not you will get it. I would sense that it is liable to RCM.
Perfect, sir. So the next question is by Shivendu Agarwalji. Sir, would request you to give us perspective to understand the interplay of Contract Act and GST and Income Tax Act in terms of JDA and the real estate sector. I have just started reading your book on the interplay of GST and allied acts, but would be grateful if you could kindly give us the food for thought.
So actually, this is वही तो कर रहे थे अभी तक. But Shivendu, it's such a significant topic that I don't know if I will be able to do justice to your question by attempting to answer in a couple of minutes. So I would only urge you to please consider the chapters on income tax and transfer of property, easements, which addresses all the questions. There are examples also to help understand how these operate. In spite of that, if there are some questions, perhaps I will respond to you offline. But I may not be able to do justice to the big, significant questions in a couple of minutes.
Perfect, sir.
Any other questions?
Hello.
Vinay Karthik. Yeah.
Hello.
Yeah, basically, this is something, this withdrawal failure is basically, if I don't do this, what will happen? That is what we have to examine. We take that example of the works contractor that we were talking about. If I don't submit the bills within the 5th, what will happen? It is not that the contract will get terminated. The contract will continue. The next bill will not be accepted. So when you look at each of these aspects, if I withdraw from doing what I have been asked to do, what will be the direct result of it? Will the other person become entitled not to perform? If I don't pay the consideration, can I say that you should still supply the goods to me? No. If I don't pay, you're entitled not to fulfill your end of the bargain. So therefore, this is a test that I have tried to arrive at empirically to see if it is consideration or not. And if it will fail, on withdrawal, then it is most likely consideration. But if it will not fail on withdrawal, then it is not consideration, it is condition.
Thank you, sir.
Yeah, as far as the other question about slot charges, GST on slot charges has nothing to do with whether the goods which you are exporting are taxable or exempt. So I would sense that slot charges will be liable to tax.
Perfect, sir. Thank you so very much, sir. Thank you so very much. And as Arup mentioned,
Hello,
this is the best.
hello.
Yeah.
I've got a query. I've got a question.
Yes, sir. Please introduce yourself and ask the query.
I'm S. Datta. S. Datta here. Just a moment.
Yes, sir. Yeah.
Yeah.
please.
My question is the concept of mutuality is equally applicable in GST as it is in direct taxes?
So concept of mutuality in the context of clubs and associations have been somewhat overcome by the retrospective amendment in 7(1)AA. So therefore that has been overcome. It continues to the limited extent of firm and partners. It continues to a limited extent as far as firm and partners are concerned, but as far as clubs and associations are concerned, it's overcome by 7(1)AA amendments.
Okay. Thank you, sir.
Thank you.
Over to Prashant, sir. Thank you so much, sir.
No, this question is answered. No, Akila question, that question is answered.
Yeah.
I'll answer that. It says, what would be the implication where it is an exempt supply under GST, but contract says inclusive of all taxes? I would like to invite you to please consider section 64A. I'll give a long, now that we have a little bit of time, I'll give a long explanation. When a contract is signed, the seller does not have a statutory right to recover taxes. This concept of direct tax and indirect tax is only in economics. It's not there in law. All right, in Chotabhai Jetabhai Patel and Sons judgment, 1962 ARSC 1006, Supreme Court said there's no such thing called direct tax or indirect tax. All right, it's only Group 2 CA final. All right, this tax is what the person named in the law is liable to pay. Whether he can recover, he cannot recover, that is a contractual matter. If your contract is silent as regards taxes are concerned, then your customer can refuse to reimburse taxes. But the obligation to discharge tax remains on the supplier. So when we have a contract that says inclusive of all taxes and the goods are exempt, then the whole payment is consideration. It is not, does not have any tax component at all. But tomorrow, if a contract says inclusive of all taxes and tax is introduced, then you will have the provision of section 64A of Sale of Goods Act, which says when a contract, when existing taxes are increased or non-existent taxes are introduced, then the buyer is liable to pay the new tax or the additional tax over and above the contract sum. So what happens, the reason for that provision is that a tax that was never in existence on the date of contract could not have been in the contemplation of the parties entering into negotiations. So therefore, if the tax itself is not there, merely stating the price is inclusive does not take away the person's right to claim tax extra if it is introduced. Secondly, the only way risk of new taxes can be inbuilt into a contract is if the price is stated in the contract called firm price contract. If the contract is on firm price basis, then even if there's a new tax, it will not be recoverable. So as far as the short question is concerned, if the goods are exempt, contract is inclusive of all taxes, then it will be 100 plus 0. Contract will not have any tax, but the entire consideration will be price of the contract.
Sir, as a corollary question to this, sir, as a contribution to this, what happens if I am supplying a exempted service
Right.
as taxable, and later on it is determined that it's an actual exempt service. So I have collected the taxes, I have availed the ITC, I have paid the net tax to the department, to the government.
Right.
So in this case, can it be said that Section 76 will be impacted?
See, as far as department is concerned, they are welcome to issue a notice under 76 and 73. For the output tax, they will collect it in cash. ITC, they will demand reversal. But
Right.
if the contract says inclusive of taxes, at least when we are writing contracts here onwards, we should look at what tax are we talking about, sell side tax or buy side tax. When we are saying taxes extra, it is helpful to say sell side extra or buy side extra or both extra, because if the product becomes exempt, ITC loss I will be eligible to recover. There is a Unison Metals larger bench decision which says that if you recover ITC lost, it is nothing but additional contract price, and the 76 or in Central Excise 11D won't attract. So therefore, we have to be very careful. Blindly saying taxes extra is not sufficient. We should be more specific to say sell side tax or buy side tax.
I think, sir, that's a wonderful insight, sir.
Yes.
Bifurcating both the sides. I think that's what we don't do. We normally say, taxes extra.
Sir, I'll give a very simple example. What happens? Take a resident welfare association.
Yes.
50% of residents are below 90,000 per year. 50% are above 90,000 per year. So 50% of them who are above are paying 18% GST. 50% who are below. Let us say that association has a total ITC of 14%. Since 50% is liable to Rule 42 reversal, ITC, that is Rule 42 reversal, will now be allocated to 100% of the members. So those who are above 90,000, they're paying 18% plus they're sharing 7% ITC loss. So therefore, in such cases, above 90,000, you must charge them 18%. Below 90,000, you must charge them 14% as ITC loss. So this ITC loss can be commercially a game changer, sir, because now margins are in single digits, GST is in double digits. Interest on GST is in high, is also prohibited.
That's what I was saying. That's what I was just going to say, that, compared to the FD rates where the interests are like running away now, 18%.
True, sir. True, sir.
Thank you, sir. Thank you. So I think if we have any further question, we can take them. We have the pride and privilege of having sir with us. But if we don't have questions, maybe sir has other appointments to catch up on. And we are really grateful. And DTPA is really grateful to sir for having, deliberated on an issue for more than, I think, close to 3 hours. I think that's really wonderful. Like for all of us, we are really privileged. So I would hand over the baton to Abhishek ji, who will take the proceedings further. Abhishek ji, over to you. So Abhishek ji, I think, has some network issue.
You can
President,
please,
sir,
you can please, sir.
Ajay, he's coming. Yeah, he's coming. Yeah, Abhishek ji, over to you. Ajay, just one. You are on mute. Just 30 seconds I'll take. So since today is the concluding day of our entire series, me and Abhishek ji and Ankit ji and President sir from the entire management of DTPA would like to thank each one of you for having given your valuable time during this precious month of July for enhancing your knowledge in terms of GST litigation. And we are sure that with the blessings and grace of learned speakers like Jatin sir, we will take even this thing to a higher level, to the next level, where we will discuss if we are thinking of having a threadbare session or a series or a workshop on litigation. So we are planning on those terms, and we hope that we also get your support on those lines also.
Yes.
Thank you. And Abhishek ji, now what to you? नहीं उनका शायद I think there is some technical unmute करना पड़ेगा आपको. You have to unmute. But he's just joining back.
Okay.
Yeah.
Thank you so much, sir. Sorry for the network issue. I don't know,
Excellent.
last 2 minutes. Thank you so much, sir.
Thank you. So thank you, everyone. Thank you for joining in and
Yeah.
have a wonderful evening ahead. Thank you very much.
Thank you, sir. Thank you so much.